Hello and welcome to this week's edition of Invest Africa. I'm Alicia Second. Well, Africa's financial services industry has experienced strong growth in recent years. The financial services industry on the continent has the potential to unlock Africa's growth story and further encourage investor confidence. Let's take a look at this report.
Africa has come of age and can now compete with the rest of the world. According to tax and advisory firm KPMG, financial services sector can unlock Africa's untapped growth potential. This due to a growing consumer market with an estimated spending power of $1 trillion. Although Africa's financial services industry has experienced strong growth in recent years, due to the ongoing global financial crisis and its impact on Africa, a large percentage is not included in the formal financial system.
Africa's economies were significantly adversely affected by the 2008 global financial crisis and even the global economic recession that followed. And so there is a resilience that is evident in the continent, not just in South Africa. However, regulatory pressure is really quite ubiquitous. We're not going to escape it, whether it is Basel III or tightening of how banks operate gradually in the continent. It is happening.
According to Standard Bank analyst Simon Fremantle, only 25% of the population in Zambia has access to banking or other formal financial services, while in Nigeria, 80% of the population either access finance through informal means such as mobile banking or not at all. Even in South Africa, the continent's most developed economy, 1/4 of the population lack access to financial services. Africa's financial services industry's ability to contribute to powering Africa's economy is at the consumer level. The future for banks in Africa is said to lie in retail.
We need to find ways of regaining the customer trust, the confidence that customers have in banks. That needs to be rebuilt. And we are also seeing things like, for example, the most trusted brands in the world today are Apple and Google instead of people trusting their banks.
Although formal financial sectors may limit households' access to basic financial services, retail banking considers everyone, from a low-scale enterprise to a large-scale enterprise. Africa's financial services industry has proven to be one of Africa's key economic components as it creates an environment for growth.
Let's get into some analysis of the evolution we're seeing in the financial services space on the continent right now with Minos Gerakaris, who's head of trade finance at RMB, and Chris Hart, chief strategist at Investment Solutions. Welcome to both of you, gentlemen. Thanks so much for joining us today. Let's, Chris, start off with you. What are you making of the kind of evolution we're seeing within the financial services space? Because, of course, it's domestic activity that's begging for the service, but also Africa's role within the global context as we see trade deals coming more and more to the fore.
One of the things is that the financial services is still quite fragmented, and in each country there's a different stage of development. And one of the things is that there's a huge lack of deep and wide capital markets, whether it's stock markets or equity markets. So a lot of your financing activities sometimes gets done outside the continent, in other words through your Japanese or European banking systems rather than in Africa. So there's quite a lot of potential to move business onto the onshore, as it were. But there still is quite a bit of development that needs to take place in terms of capital markets and money markets and that kind of thing, so that you can actually consolidate the pools of capital, that they're not as fragmented, to move it from under the mattress, as it were, and outside from hidden sources where you've got financial repression and you've got capital that's actually, you could say, escaped the system because of things like exchange control and that kind of thing, and that is actually held outside the country, the individual countries. That needs to still be brought back. In a sense, so one needs to still see quite a bit of liberalisation that to take place.
Minos, bottom line, you've got urbanisation and the demographic dividend that's part of the appeal, trade and trade finance as well. Give us a sense from the perspective you have of the kind of activity that's enticing investors right now, because just this week Standard Chartered making headlines that it's expanding operations in South Africa specifically, and that to chase business opportunities as they see private businesses explore explore more aggressively on the continent?
Indeed, Alicia. I think it's largely been a sector that hasn't had a huge amount of focus, in that banking largely across the continent was quite lazy and was taking in retail deposits and essentially just lending it back to the government in T-bills or short-term bonds. So very lazy armchair banking, and banking wasn't driving the growth in a number of these economies that it should have been done. There's huge potential for that now, and a lot of requirement for local funding to drive infrastructure, to drive growth, to drive development, to lend to the commercial sector as a whole. And this is what's making the banking sector exciting to indigenous banks to expand, as well as foreign banks coming into the market.
Let's take a look, Chris, at how the appeal is translating into actual investment here, because we've had our big four right here in South Africa moving aggressively in order to make their presence more felt on the African continent. What's your assessment of the playing field? Because certainly those global players being awakened as well.
Well, I would prefer to use the word an assertive African expansion program, because it's still very cautious, and one needs to be understandably so, because each country has its own pitfalls. One needs to understand it before one actually just goes in. There's been many, so not necessarily in banking, but certainly many misadventures where South African companies have blasted forth and actually have had their fingers burnt. And so one needs to appreciate that while there's huge potential, and I think, as you say, the shift away from armchair banking as the internal demand, as your homegrown African corporate starts to flourish, as you've got in Nigeria and Kenya and Ghana, etc. It's no longer just tiny little businesses that really just need a deposit facility and a sort of transaction facility. You now need greater trade facilities, and the greater demand for people who are actually embedded in the economy rather than something that's based externally. And that's why I think you've got the elements for the financial services sector to take off. There's other areas that still need to be developed, asset management and pension funds, for instance. Something is huge development that still needs to take place, that's still very embryonic.
But we are seeing traction. Minas, whatever strategy you choose, it's no easy feat. I mean, FirstRand experiencing the political difficulties of investment in Africa. It's embarked on things with an acquisitive strategy. It thought it had acquired, for example, Finance Bank, only to have the deal jettisoned by Michael Satters and his new government in 2011. Things taking a while to conclude over in Ghana with Merchant Bank as well, where the new president there is not a fan of that deal and how it's at play. I mean, it's that political risk that comes with doing business on the continent that's highlighted even more so.
Yeah, but I think you've really got to look at it as expansion's not a short-term solution. When a firm's taking a decision to enter a market, it's for the long term, and it's about a sustainable growth path in a specific jurisdiction. So whilst there may be challenges in certain markets, and particularly in the startup phase, one must never lose sight of the end goal, and that is to be a regional financial services provider. And I think the strategy's long changed with the majority of financial institutions, from one of just following your customers, and you've looked at the big retailers and some of the miners, etc., as they've expanded, looking to service just that small niche, to going in as a full-service domestic bank. Yeah. So when you enter Nigeria, you enter as a Nigerian bank. Same in Tanzania, Mozambique, Ghana, wherever. And it's looking to bank the population in country, bank the commercial interests in country, and then look at strategic corridor flows, particularly in the South-South trade zones at the moment, which is really driving growth.
If you look at the strategies that are currently at play, and if we're looking at the big four South African banks as examples here, they've all embarked on the growth story in Africa with different strategies. We've got Standard Bank organically doing things, but then with the muscle of ICBC helping it along. Yes. You've got FirstRand looking to pursue its growth acquisitively, Nedbank joint venture with EcoBank, and then ABSA with its partnership and parent company Barclays, or that partnership as it's evolved. Which one works best for you, do you think?
Well, to my mind, each country is a unique opportunity? Is there an acquisition opportunity, or greenfields or brownfields opportunity, or partnership? And I think each needs to be taken, on those merits. I don't think there's any one sort of solution, and that's always the problem when we speak, is it's Africa as a single brush. As I say, you certainly wouldn't treat North Africa the same as Sub-Saharan Africa as a general divide. You certainly wouldn't choose, have the same strategy in, say, Senegal as, or even a Francophone African country as opposed to an Anglophone, or even a country which is still got very rudimentary financial services industry. Let's say Burundi, for instance, is very different to Ghana, as it were, and that's why one really does need to actually do one homework in the sense that Nigeria is already a market that's got established banks. In that, you'd probably prefer to do an acquisition there, but in a country like Tanzania, you may prefer to do a standard bank approach.
It's also often, driven by local regulation. If you did want to be in retail banking in Nigeria, there are no new licenses to be issued. And in a number of other jurisdictions, there's going to be less banks rather than more, as regulators look to build a safer, more secure banking system and drive consolidation through raising minimum capital. So in those markets, then acquisition becomes the only viable entry proposition.
The only lesson that one needs to learn from the first Rand experience is that the regulatory environment is not stable because it's connected with the political
So let's take a look at that, because we've touched on the
yeah.
political environment and now regulatory environment. There are concerns about regulatory reform, and then there are concerns about
Yes.
political interference. And some quarters suggest that intrusion by governments in banking is now a fact of life, be it in the form of tougher regulation, new taxes, nationalization. How do you draw a distinction between the two? Can you?
You can, and I think one needs to understand that when you've got a stable regulatory platform, it doesn't actually matter what happens at the ballot box. You can be in business regardless, etc. The new guys may come in and say, we're going to tweak this or change this or whatever, but your actual basic ability to be in businesses is not changed. Where you actually say, the new guys say, oh, we actually don't think you should be in business, etc. That kind of thing is been Africa's curse, if you like. I can remember being at a conference once, and the finance minister was speaking on the platform, and he's very enthusiastic. We are a place that we open for business, come and invest. And people said, but when we do this, we experience these hassles. And then he said, phone me directly and I'll sort you. And I said, that's exactly why we don't want to invest in you, because we depend on individuals to unlock or lock, etc. And so you find sometimes the players in the economy use the politicians as as their leverage to actually poke a stick in the eye of their competitors. And so that instability is something where you get stronger platforms, where you've got good elections taking place, for instance, is probably your best clue as to whether you're getting what I call the constitutional stability, where you actually things are taking place within a constitutional framework. And that's where the safest is. Where you've got still dodgy elections or coups, etc., it's probably
to mitigate
a place
against
to
some of the
avoid.
challenges, some of the risk, emphasis naturally being placed on strong, efficient, transparent regulatory systems. Minas, the South African banking system, for example, has been pretty well shielded, largely due to tight regulation, good governance, and being well capitalized. Yet, worldwide, regulatory oversight continues to be one of the top concerns that faces the financial services sector. Warranted, one would assume, where it's given the turmoil that we've seen. It's a lack of regulatory oversight that's actually triggered it all.
No, I disagree with you. It's the one sector that's the most regulated. When people say lack of regulation, I'm saying maybe inappropriate regulation, but my gosh, it's the most regulated sector, so that's where the problems came in. Maybe it's because of the regulations that are these constantly competing intrusions that create a lot of the problems.
Do you agree with that, Minas?
Absolutely. As a regulated person, we are always regulated, and the regulation is always evolving. I think to comparing the global financial crisis and having that as a lack of regulation, or as having that as people finding regulatory arbitrages and possibly using those to create problems, is a completely different debate. But there's certainly sufficient regulation, and we see in the African continent using these learnings to build a more robust banking system.
Well, one of the countries that has done that, Chris, has been Nigeria. It clamped down on things very aggressively back in 2010. We had the new central bank agenda cleaning things up in a big way. What's your assessment of that playing field right now, post-crisis? You already alluded to it when you compared it to Tanzania.
No, exactly. It's a fairly, to my mind, if you look across the African continent, you'd say South Africa's got a good banking system, and then you'd immediately think Nigeria is the other, big banking player where it's an established industry, but it's gone through quite a lot of turmoil itself. I think in a sense they've tried to get rid of the fly-by-night, so that's to help to clean the industry up a bit, and so I think in there they've achieved quite a bit of success. Okay, but I think one's also got to be careful if you get what I call the fascist kind of economic model, where you're starting to intrude into the boardroom to actually make decisions, business decisions, as remote control, where you don't have to have the consequences of those decisions, but you're still making those decisions, forced lending, that kind of thing that can take place. So that's always a fear. Likewise in pension funds, do you just use it as a pot to plunder when you're a little bit short of cash as the government, which is why you don't develop the actual industry, and it's a major important source of capital formation.
Well, we're going to have to hit pause on the conversation for now. Certainly the Nigerian banking crisis that did unfold was relatively short-term. If you look at the kind of long-term impact it managed to have on sentiment towards the Nigerian banking sector as a whole. We're taking a quick commercial break right now, but there's more on Invest Africa when we return, so stay tuned.
And leverage lending to the stock exchange.
Exactly.
Welcome back. You're watching Invest Africa. We're still focused on Africa's financial services industry, and with me at the desk is Minos Gerakaris. He's head of trade finance at RMB, and Chris Hart is chief strategist at Investment Solutions. Let's pick up on the conversation we were having ahead of the break, but take it to the kind of development we're seeing in terms of product offering to Africans out there. Chris, while you need to plan, as a bank, you need to be nimble enough to adapt as well. What's your sense of the evolution we're seeing in providing financial services in Africa for Africans? Because we speak these days about reinsurance, private equity, and that to a large extent speaks to the deepening of the African financial system.
Very much so, and that's the difference, as you were saying earlier. The armchair, lazy armchair banking is shifting, and though that's a huge competitive disadvantage. Before it was just you milk the profits of whatever it is. Again, I must emphasize each country is different, and the circumstances are different in terms of the economic critical mass that they've got in the first place, the development of their business and corporate sector, small business. But the fact is that you're getting a progression of and growth of industries where small businesses becoming medium businesses becoming corporate. Some in West Africa, you're starting to see emerging companies that have got even a regional footprint, not just a national footprint, which means it's an important development. So with that comes the need for trade finance more and more. Corporate activity, as listings improve on the stock exchange, you've got more improvement of that business, and so that's on the corporate side. But on the individual side, as more people get drawn into the formal economy, looking at the development of mortgage loans, that doesn't exist across large swathes of Africa. Just a simple thing like a mortgage, which we take for granted, or a car loan, or etc. And all of these kinds of products that come about. That's from the formal banking system, but the reverse is true. The actual experience of Africa is coming up with new innovations that's feeding back into the financial system, as the Cypriots will start to learn under the mattress banking, for instance, will look at products like M-Pesa and that kind of thing, and the ability to transact financially without a bank account.
Yeah, let's focus on a product like M-Pesa, because if you're looking at the Kenyan banking system, we had the big banks historically, to a large extent, having turned their noses up at the unbanked, seeing it or deeming it as too risky, to venture into that territory. And then came along Equity Bank, turned that whole banking model on its head and targeted the unbanked specifically. I mean, surely that is potential that cannot be ignored, given the kind of success Equity Bank has had in a territory like Kenya.
Absolutely. I think all banks are looking to bolster their balance sheets. All banks are looking to grow their liability base and get in depositors. I think the lens that had been placed on the unbanking sector in the past is, how can we lend to the sector? And that isn't necessarily the lens that needs to be placed of it. Also, particularly in the international banks and the banks from more mature jurisdictions, the cost of regulation in terms of banking a client in some of these sectors, in terms of some of the KYC, anti-money laundering regulations, are particularly onerous. So it's striking that balance between providing a service, albeit potentially a basic banking service, and having all the benefits that come as part of a banking system.
Yeah, the challenge of reaching those markets also being done a favor by the advent of technology. So you've got the cell phone banking coming into the fore, and that opening up this avenue in a very immature market. I mean, making headlines the other day, Investec introducing Share Trade mobile app as well. So it's taken a whole new level now.
Exactly, and that's the point, that technology, not driven through the banking system, but it's one of the peculiarities about the South African economy. Why do we have such a strong IT sector? Because we've also got a strong financial services sector that sort of do feed on each other. And the actual, the cell phone companies are obviously blazing the trail. It's just turned the social, interaction on its head through Africa, and that's also then opened the door to have a facility to actually access and provide services to populations as a whole, rather than just sort of picking out the cherries, plucking the cherries out of the economy, and if the cherries aren't big enough, you just ignore it. And so you find in that it's helping to facilitate what I call the broad spectrum multi-sectoral growth in Africa, rather than just dependent on resources.
Yeah, Minas EcoBank is a bank that admits that it was a bit too aggressive in its branches, bricks and mortar investment. How do you weigh up the pros and cons here? Because there are two sides of the coin that you've got to look at: a physical presence and then a presence via technology.
Yeah, there is indeed. I think it's also striking a balance between, can you compete in a market? Simply having bricks and mortar in a country doesn't necessarily give you a license to go out there and compete. And you're going against names in country which may have been there 50, 80, 100 plus years, have an established presence, are typically locally owned, and there's a national pride in terms of banking with your local provider and your strong indigenous provider, and the ability to compete isn't always there. So then it is looking for either technology solutions or innovation in terms of how can you cross-border bank that flow. And there it's more often a case of following your customer in, or the bringing to the party what the local banks might not have, and that's the scarce resource of foreign currency. Yeah. So then being able to do the dollar deals cross-border, then you can very practically have a small operation, be it a one-branch merchant bank or a rep office even, to facilitate financial transactions cross-border.
Chris, how do you see the African banking landscape shifting as we move forward? And let's do it, let's say over the next 5 years or so.
I think there's going to be almost three prongs to it. There's the retail side that's developing, but there's also the business, corporate
so your
banking.
Corporate and investment side.
That side, but there's also the the financial market side of it. In other words, things like broking, stockbroking, capital markets, that kind of thing, the investment banking side, that I think is going to be growing. So all of them are quite embryonic, if one would look at a common tray. And that's basically where it is. So it's really basically quite a lot of growth and potential that's coming through to the fore.
I think a theme we would also see aligned to that is going to be consolidation.
Yeah.
Some markets can't afford to have 50, 60 banks in country. When you look at, say, the South African paradigm, where there's a big four and then ancillary banks around the side.
Yeah, that's where you're going to see the banking sector corporatize from almost being a mom and pop kind of local village type of operation to being something that's got a national
Well, there certainly has been a lot of
footprint.
debate around one-stop banking solutions versus the streamlining of operations with dedicated subsidiaries as well. Gentlemen, we're going to have to leave it there. Thanks so much for having joined me at the desk. That's all we have time for this edition of Invest Africa. Big thanks to my guest, Minos Gerakaris, who's the head of trade finance at RMB, and Chris Hart, chief strategist at Investment Solutions. From me, Alicia Seckham, it's goodbye.